Yo, YouTube, it's your favorite guru from Timu here, and I got a banger of a vid. I'm gonna be going over my strategy in this video. I'm actually doing this is a one-on-one call with my students. I'm gonna be posting a bunch more of these when people start rolling in and they have some good questions and stuff like that that I feel like y'all might need or might want to be answered. We go over the Fibonacci tool and my strategy and how I find trading setups just in general. So yeah, make sure y'all boys watch it to the end because I go over all of that stuff in this vid right here, and I promise you, just take notes, act like it's an actual one-on-one. If you have questions, ask those questions down below. But if you want a one-on-one partner with me, it's in the description. Y'all boys can join up and sign up for a 1v1 or join. If you don't, I don't care, nigga. Enjoy the video. I'm giving out free sauce to y'all boys. So I hope this helps y'all, and let's get ahead and go into it. When you are going into the trade, I don't care how good your strategy is, how good you feel like you know the market or anything like that. It does not really matter necessarily. What really matters is if you understand the trend and you have an objective of the market. You know what I'm saying? Those are the main things. So when I come into the market every single day, what I look for is my bias. You know what I'm saying? My bias of what I think the market is going to do. And then I look to see if it's an actual good trading day. Like right here, if you see how London, this was a bank holiday, I didn't take no trades right here, right? So I would never hop in any trades during a chop session or anything like this because it was no good trades for me right here, right? Down here though, we could tell by looking at Asia and London session really if the New York session is going to be good. If Asia session is moving, I say anywhere from 80 to 100 points, and then London session is doing the same thing, that means we're going to have a good session. You feel me? More than likely, we're going to have a good session. You still here, right? Just making sure. Come on.
Yeah.
All right. Yeah, and that's my main thing. I figure out like what do I want to see by looking at price action, by looking at candlesticks, and you understand your bias by looking at it's called institutional order flow. I don't know if I still have that video in here somewhere. I should have it that talks about order flow. I probably deleted it, but I'll redo it because I want to redo the whole course so I can put new knowledge in there. But institutional order flow, and what that means is, okay, how you identify your trend. So typically I go, if I'm looking for a quick trend trade, I'll go to the 15-minute and see what we're doing. Okay, on the 15-minute, are we holding bullish price action, or are we disrespecting bullish price action? Are we holding bearish price action, or are we respecting bearish price action? You get what I'm saying? Now, what I mean by that is, okay, let me delete this because it's part of the strategy, and I'm gonna get into the strat real quick. We just got to understand the fundamentals, right? So right here, we put in an SMT where ES did not take out, and this was an actual trade that I think I posted this trade on the channel. We put in the SMT right here, and we ended up taking out these lows. This is, you remember back in like a while ago when you was first in here, I was talking about the power of three. The power of three still works. That's how the market moves, right? We ended up sweeping liquidity, had our manipulation, put in an SMT, and we started pushing down. What did that tell me? More than likely, we're going to continue lower, and we're respecting bearish price action, right? Now, once we came above up here, right, with this candlestick, we ended up holding bullish price action, and we could tell we're holding bullish price action because how this candlestick shot up to the moon like this. You know what I'm saying? We ended up shooting 40 points past these highs, right? Well, not 40. More, well, yeah. Like, is that 40? Let me see. Right here. Yeah, we ended up shooting 80 points up past these highs when we ran past these highs. That's a really good key that more than likely we're going to continue higher after we take out a swing high or a swing low, right? Down here, once we ran through this low, we didn't just come through and wick it like we came right here where we just had these wicks and stuff like that. We actually ran through it with speed. You get what I'm saying? And on the live charts, like taking an actual trade, you can see the market actually starting to build, sellers build momentum and actually push the market down. You feel me? And that just helps you understand, okay, if we're holding bearish price action right here, if we have came up here, we could not break past these highs. Now we're coming back down here and we breaking past this low Let me mark it out. We're breaking past. Oh snap! Why did it do that? We're breaking past this low, taking this low out, and now we're coming down with this low, taking this low out. That's why I entered in for a continuation trade. Okay, more than likely we're going to come through to take a fair value gap or go to a previous low, and I think I went for a fair value gap right here. Yeah, I aim for this fair value gap inside of here, or the 1 hour fair value gap, something like that, right? And if you don't have a good understanding of what's the word I'm looking for, if you don't have a good understanding of where you want to place your stop loss or TP, my typical thing, I go for my stop loss, I go 50 to 20 points, and then my take profit is usually, no, not 50, 15 to 20 points for my stop loss, and then my take profit is going to be 50 to 80 points. You know what I'm saying? And that way you in and you out. And right now, do you have any questions?
No.
Okay. All right, and you understand where I'm getting at with telling you the objectives and stuff like that, why this is so important.
Yeah.
Okay, baby. Just making sure we all got to understand it. Yeah. When you get on the charts, the main thing, and this for the you people that's watching on YouTube, main thing you want to understand is, okay, what are we doing on the charts? That way, that clears out any other noise that you got going on. Okay, what do you see going on in charts, right? Like right here, we see we're taking out previous lows with speed, running through them, and what does that tell me? Sellers are in. Okay, now we're running up. We came down here, swept liquidity right here. Now we're running up. We ran past this high, and you could have used this high as a re-entry to push back up because we're continually bullish. The main thing you want to do, especially as a day trader, is to be in continuation trades. I'm gonna keep it a buck. Stop going for reversals. Stop looking for if the market is dumping down. Stop looking for buys and stuff like that, and just look where you can get in for sales. Right, that will change your whole entire trading overall. Okay, now let's go over well, since the Fibonacci tool is kind of easy, we'll go ahead and do that, and then I'll put my strategy towards the end. The Fib tool. So you mean OTE, premium discount, and you probably haven't learned standard deviation, but I give you a little what's a mini lesson on that. Okay, premium or discount is kind of easy. Okay, let's go to templates, boom, premium discount. Now, how I draw my premium and discount out is I do by the previous swing trades, right? So we swept liquidity right here. I keep dragging it until we end up getting a pullback, right? So hold on, that don't look right. So right here, let's go back in time. Right here, we ended up getting a sweep of liquidity and put in the SMT, right? So if you're a Fibonacci tool trader, which I ain't gonna lie, the Fib is just a good it's a good confluence to have, but it's not something I just completely trade with. You know, like the Fib really doesn't change anything, but it is a good way to understand the actual market. So I got this Fibonacci tool right here, drag it out like that. Well, actually, after we sweep liquidity, what we're going to do is start no, this is the wrong one. We're gonna do OTE. After we sweep liquidity, what we're going to do next is wait for a new candle to be put in, and then we're going to follow that candlestick. So we put in a candle right here. We're going to drag this thing down. This is our OTE of this range. And OTE just stands for optimal entry. So we got a new low, and you just want to keep following the low of the candle when you get the sweep of liquidity. All right. So we got a new low right there. We want to put in a new candle. Boom. It ain't put in no new candle yet. And if we get a retracement back up into this range up here, you can start looking for sales, if that makes sense. Because the thing is, with premium and discount, it's like, we just had a Black Friday deal. You know what I'm saying? We just had a Black Friday deal. People were going crazy, and they were buying stuff for discounted prices, right? So when you are a buyer, you do not want to be buying stuff at a premium price. You know what I'm saying? You want to be buying stuff at a discounted price. Why? Because you will be getting the best price and the best sales, right? This is the wrong way. Hold on. There we go. All right, bet. So right here, for example, let's just say we're at a store, right? It's Black Friday, like yesterday, or Cyber Monday, and you see that the price normally be at $300, right? normally be at $300. So as a buyer, you do not want to come in here and buy this price at no $300 or some higher like 350 or going up. You get what I'm saying? But what you would buy the price at if it dropped low enough to like 150 to $200, right? Now you're willing to pay for this because you are will be saving almost half or $100 on this deal, right? You get what I'm saying? And
Yeah.
if you're a seller, it's the same thing, but vice versa. It's flipped. Sellers are going to sell price at a higher limit because that's where they make their most amount of money. Say you just went and bought this price, or bought this PS5 for 150 to $200. So now you got you saved $100 right here. It ended up shooting up. Price ended up shooting up all the way up to 350, and you sell that PS5 for $350. So you just made a whole 150 to 100, no, yeah, 150 to $100 profit, I think. Yeah, something like, you get what I'm saying. That makes sense. I think $200, 200. You just made a $200 to $150 profit. That's what I mean. Do you know what I'm saying? If you sell it at this price, so that's why a lot of people talk about premium and discount, because it's the same thing. It's the same thing for the markets. You get what I'm saying? It's the same exact thing for the markets. We look at this right here. So we got this swing trade right here. We ended up putting in this swing trade all the way down here, the previous day low. You can drag it from the previous day low and drag it all the way up like this. All right. Boom. Where am I? Am I at the right spot? All right, boom. All right. So what by like how people trade this, how they trade this tool right here, what they want to do is wait for price to come below this zero point 0.5 or this discounted price, and that's where they'll begin to look for buys, right? Oh, snap. See, now we're below. Now people are going to be looking for buys right here, right? And as you can see, it's actually kind of useful. We came right down to the 50% range, and we ended up pushing up from previous days price action. You get what I'm saying? So we came into 50% of previous day price action and started running back up, going back into higher prices, and then we start printing to the moon. So that's the simplest way I can put premium and discount. Like I said, I personally do not trade it because I don't. It's not really that useful to me. Just being honest, what I do trade is optimal trading entry, or OTE. I'll teach you that because OTE is really good. So let's go over that. All right. I was showing you that earlier. So right here, for example, we ended up coming through and we ended up having a reversal. Did we take out a low? Let's just say we took out this low, for instance. Or you can use this. We ended up manipulating or something like that. We just had a sweep of liquidity. So what you're gonna do is grab your OTE tool. Oh, you need the settings for this, don't it? Okay, hold on. All right, here go the settings for it. Make sure you get a screenshot.
Got it.
All right, bet it. So now, OTE stands for Optimal Trading Entry. Like I told you earlier about the premium and discount, they all tie together. You typically want to be buying prices around in the 0.618 and the 0.786 range. That's the where you want to be buying price at if you have a super liquidity and the market starts reversing, right? So this would be your best entry for a pullback right here, right? So we get the entry right here. You can enter in for buys. I wouldn't. I'll wait for a confirmation. That's why I say it's really good for confirmations. So let's say we end up holding on this range right here. We start printing up. I want to get past this high up here, and that's where I enter in it, right? There we go. I can look for buys right here and just let that bad boy play out like that. You get what I'm saying? That makes sense.
Yeah.
Okay, that's all optimal trading entry is. Once you get a sweep of liquidity, if you're expecting a reversal or the market does reverse, you want to drag it from that swing low all the way to that current swing high, right? You get what I'm saying? And once it tap into that range, what I do is wait for a confirmation to actually see if it respects that range or if it doesn't. You get what I'm saying? That's all I would do. Uh, Now standard deviation is probably one of my. It used to be one of my favorite trading tools until it just got inconsistent. You know what I'm saying? Now standard deviation, and here are the settings for it right here. Oh snap! These are the settings. Make sure you get a screenshot of this.
Hold on. Yeah.
I bet that.
Got
All right, so standard deviation. How I use it is what I typically do is I drag it from the bottom of London session to the top of London session, like this London lows all the way to London highs, right? And what this these two areas do, the 2.25, the 2.5, all of these, this tells me where price more is most likely going to reverse it, right? This is where price is more than likely going to reverse it. So I want to be looking around in this area for a reverse. It's just a good reversal point. I used to preach standard deviation once I finally learned it, but the thing is, it can be very inconsistent. If you start just lining up levels, okay, yeah, I'm going to use this level, I'm going to set buy limits, and like I said, every confluence is just used for understanding. So if we end up coming down here, which we came into the negative, we came into the 2 area, and we started reversing, oh, I can be like, standard deviation is in this area, we stepping into a previous price range, so on and so forth, we hit OTE. Getting in for buys right here makes sense. You know what I'm saying? That's how I would use standard deviation. That's how I would use the Fibonacci tool, right? Do you have any questions about that?
Mm-mm.
Okay, baby. Like I said, confluences are really good. But people only trade confluences. People do not trade, like, what I mean by only trading confluences is people they get into a trade uh just because they see a fair value gap, or just because they see a standard deviation thing, or just because, no, how you build your strategy is by putting all of this stuff together. Okay, yesterday we were previously bullish, right? We came back down, we tap into the discount of this range like we did earlier. Let's go ahead and get this tool out right here. Premium discount. We tap into the discount of this range right here, which is also lined up with our standard deviation. And if we go on the higher time frame, it's probably a fair value. Yeah, it is a fair value gap, which is we also tap into this 4-hour fair value gap like this. Okay, now I could be looking for buys. Now I just need to find where I can enter in it. Okay, let's go on to the lower time frame. Boom, right here we have a reversal point. Right here at this area, let's pull out OTE and see if we're holding on to OTE. Drag this. Boom, we tapped into OTE and we're holding it. I can enter in for a buy trade right here above at these highs once we get past it. Right here at this high right here. Stops going below this past wick, aiming for 50 to 60 points or previous day high, since it's right there. That simple. You know what I'm saying? So,
Yeah.
yeah, that's,
I feel like
you said what?
I know. I feel like I know most of them. I just need help, like, putting it all together. If
Yeah,
that makes sense.
the thing is, see, putting it together, with it, how I put this, every day is a different trading day. So certain
Yeah.
things like these, like how everything just went together like that. Sometimes it
Mm-hmm.
won't do that. You know what I'm saying? Like sometimes
Yeah.
you have to dig a little deeper. Sometimes you're gonna have to go to the daily time frame. You're gonna have to look for a trade to make this trade make sense. You know what I'm saying? And
Yeah.
it's not gonna always be the same every single day. You feel?
Thanks.
So it's crazy that we picked a random spot right here, and it act like everything started to line up. But certain days it's not gonna be like that. Certain days you just gonna have to make a understanding of the charts. Okay, we had a pivotal change right here. Now previous price action was bullish, so I want to, of course, I want to follow the higher time frame trend. You feel me? Instead of me just being like, oh, okay, I see OTE here, I get in for trade. No, we're not gonna do that. You feel me? That's how you start to lose money. What you do, instead wait and build your confluence together so you can have you a great trade. You feel me? Putting them together, what I'd do if I was you, bro, after you start using them for a long time, you're gonna start to realize, oh, OTE, I can just tell OTE hit this range right here, right? And then we ended up pushing up like that. I could just tell by, because I know what OTE looks like because I used to use it so much. You know what I'm saying? But it just takes
Mm-hmm.
time. The market conditions are different. So just like, let's just click a random time and go. Let's just do a random time and I'll show you. Oh snap! I did not mean to do that. Let's just do a random time and I'll show you what I mean. Random time. Boom. All right, this is December. December price action. We're doing another time. I'm not doing December price action. I'm not doing that. Okay, this is 2024. Last year, November. Only thing about November, we was just straight bull runs, and this was on the 22nd. Yeah, we're gonna do another time because November just had really good bullish price action. Okay, here we go. All right, now we can see more than likely I would not take any trades. You know what I'm saying? But we can just make sense of what has happened inside of the market. You know what I'm saying? Previously we were chopping, but if we go down, we can see we have been currently bullish, just pushing up inside of the market. That is perfect, right? During the Asia session we chopped, but London session had a huge move up into this area right here, giving us about 75 points, pushing up to the upside. Once we got that, we had us a pullback where you could have called sales, tapping back into this range of London session over here. Once we tapped into London session range, what did we ended up doing? Holding bullish price action over here, even on the higher time frame. We can look at it. We ended up tapping into a 1 hour for value gap. Boom, boom. Tap this 1 hour for value gap, and price action, bullish price action, start to kick in, and it started to hold right here. So what can I look for? We could have looked for buys around in this area when we got this inverse for value gap. You just want to start lining stuff up. You know what I'm saying? Making sense of stuff. Because like I said, things aren't going to be the same every single day. You feel me? So you just want to make sense of things like that. Look at what you did. Look to the left. That's the main thing. Make sure you look to the left. Get an understanding of what's going on to the left, because more than likely we're going to continuously follow that trend that we did on the left side. That makes sense.
Mm-hmm.
All right, perfect. Let's go ahead and get to the main meat, the main ingredients, my strategy. Like I said, for people on YouTube, this is for my private what's the word I'm looking for? Students. My private students. But I'm gonna be spilling a little tea on here for y'all, and Andy, I'm just gonna have to send you over to the Discord so you can learn it for yourself. But I'm gonna go over it just a little bit for you so you can get an understanding. All right, my boy.
Bet
that. So what I trade is called order flow. You feel me? I don't know if you have heard of order flow. You probably seen a bunch of. Let's just look up order flow trading.
Yeah, I've heard of it.
Yeah, you heard of order flow. What I trade is these little numbers and stuff like that, volume profile over here, all this little stuff, right? This is what I typically trade, but the main thing I typically trade is volume. Volume is a really good tool to use. Why? Because it tells you where the most amount of traders were, right? So why does that matter? Why does the most amount of traders, or knowing where the most amount of traders were, matters, right? And that's because the market typically moves to balance, right? So I'm gonna draw this thing out so you can understand what I mean. So we all know about this little thing, the power of three: accumulation, manipulation, and distribution, right? Catch the pull back, and you can catch sales down to the side or whatever you want to do. We all know about that. But what people don't really talk about is where we came from, or where we are headed, right? So how the market typically moves is in a staircase pattern, right? So we know we move like this, right? But inside of those staircase patterns, we have things like this where we just range, we just chop, and then we have a big imbalance. Pull back to a range, push back up. Pull back to a range, push up like that. You get what I'm saying? That's typically how we move inside of the market, right? And those range areas like these are called balances, right? This is also called the auction market theory. Auction market theory, right? So if you want to do your own research on it, you can. But the market we have, when we chopping like this and we're not really going anywhere, this is called balance. And on volume, it typically it didn't draw. On volume, it typically looks like this, and we call this a bell curve, right? This right here Inside of this little middle line right here is where the most amount of volumes went through it, and you can see through right here, right? This is where the most amount of trades we tap through here the most amount of times, right? Through here, you can see we started getting a little wicky. We don't have a lot of volume up here. A lot of traders, when we got up here, they ended up selling off or taking off their orders, whatever you want to call it, and that's why the curve started dropping down. But here, this is where we had the most activity. A bunch of traders were in here, right here, getting in and getting out. But then down here, we started selling or buying in. That makes sense?
Yeah.
Okay, cool. Now that we got that, how the market moves is we typically, once we push past a previous balance, where are we going? We're going to a new balance, okay? So down here could be a previous balance over here, right? We'll just imagine a previous balance. I'm going to draw it in a minute, right? So cool, you missed this move. Okay, now we're retracing back. We're more than likely where we're going to go to this balance up here and continue down lower, right? This is how trends work. This is the main key step on how trends work and how you can I'm telling you, once you get an understanding of this, you will change your trading completely, like real talk. So we got this very choppy area right here. We drop down. We want to catch the pullback once we get into this area, and then we start dumping down like these, okay? And I'm going to show you some examples just from somebody that used it, and then I'm going to show you, I'm going to randomize the chart, and we're going to go into it for ourselves. We got Ant right here. I talked to Ant personally because he uses my own scratch. Dang, I ain't got no what's the names on him. I ain't got no pictures because I deleted profits. Let's see if he got in his what's the name. If we don't got Ant, I just use my own what's it called. Yeah, he didn't post in here. Okay, we just use my own journal right here, for example. End up catching buys right here off of the strategy because of volume. As you can see, this is what the bell curve would look like on the actual volume, right? So this tells me a bunch of buyers and sellers. A bunch of buyers and sellers were in this area. Once we break out of this area, more than likely that means one side is winning. You know what I'm saying? Okay, when we break past this right here, more than likely buyers are going to be winning because we're pushing up. You know what I'm saying? That means when we were fighting right here in this little area or in this chop, buyers and sellers were fighting, and buyers started pushing past it. Now they're winning. That makes sense. Plus the trend over here was very bullish right there. So it was just me following the trend, catching a breakout trade. Same thing for sellers right here. This was the trade I showed you earlier. We ended up having, this is our volume over here. We ended up touching into the value area high, getting a rejection, coming back in and falling back down. It's that simple. Now let me show you some actual real deal trading examples, okay? Does that make sense, or is that a little confusing? If it's a little confusing, it makes sense. I understand why. You feel me?
No, it makes sense.
Okay, bet. So boom, we're gonna randomize these charts, start new, randomize. Perfecto. All right, we're on the random chart now, right? Random chart. This is back in November. I don't know why it keeps taking us to November, but it is what it is. Cool. We want to look at what's going on inside of the market right now. First off, what I see right now going on is we have started printing down lower, right? We started moving down lower. Yesterday we dumped almost 300 points. Now London session and Asia session, we haven't really done anything. Okay. What I'm going to do is use first off, it's called Anchor Volume Profile Tool, right? This is my one of my tools I just recently started using, and I'm going to show y'all how I used it. So this was Monday. We're going to go back to last Monday, or just Tuesday down here. Okay, this was last Monday right here. All right, so last Monday was down here. Boom, and this gives me price up here, right? So this shows me where a lot of the trades were going through right here. This gives me my weekly volume profile. Okay, so this tells me what's been going on for the last week and what I can be expecting for this week right here, right? And then the next thing I grab is my fixed range volume profile tool. And what I do is I drag that from the start of Asia session to the end of London session right here. You know what I'm saying? And what this tells me is the previous overnight session, what we did or where we had the most amount of sellers and buyers at. Okay, so we had the most amount of buyers and sellers in this area right here. As we can see, we can look at it on the candles. We can see a bunch of candlesticks in here, and once we get to these lows, we start wicking back up. Once we get to the highs, start wicking back down. So these highs and these lows right here are really good levels. So I'm going to mark these out right here. We're gonna mark this level out. Snap if you let me. Boom, mark that level out. Boom, mark this level out. What this gonna tell me is, okay, once we get to these levels right here, I can be looking for buys or sells based off how we react to them. Okay, like I said here, we've been dumping down. We have been continuously going down right here, dumping down, dumping down, dumping down. It looks like we have ran through this right here. Man, if I want to get in for sales, sales makes a lot of sense right now. We ended up running through. Once we got to this value area high, what did we do? We reacted off of it with sales. We reacted off of it with sales. Then we ran through this value area low. Once we pull back to it, we also got another candle pushing us down to the downside. Where could we see? Probably possibly previous day lows. So let's see if we can. I'm gonna actually go for like 80 points. We'll do these lows right here. 50 points. That's 50 points. Stop's gonna be like right here, and yeah, this is gonna be my trade. Now, with me explaining that, can you tell me why I'm taking this trade?
Hold on, I didn't really understand it.
Okay, I'm gonna go back over it if this trade hits. So this would be a trade I would take. Oh, give us down. There we go. Previous day low as well. We almost got wicked out right there. I'm going to be honest. I got a little nervous. I said we could go for previous day low. Okay, now I talked a lot right there. Now let's break this trade down so you can understand it. All right, my boy. Like I said, ask as many questions as you need. First off, here. What was the first thing I told you when we first got on this call? What was the first thing I told you to do?
Understand the bias, like
Exactly,
what we
right?
look for.
Exactly. We understood, and that's what I did when we got on here. I understood that we have previously been dumping. Yesterday we dumped down almost 300 points. So that should tell me, okay, more than likely we're going to continuously go down. And I seen that during London session as well. We also kind of dipped into this range over here, telling me that we probably want to go lower, right? That's what I understood right there, right? And the next thing I brought up is what?
And for you to understand that, you use the how you call it?
The volume profile?
Yeah.
Yeah. So I bring out the volume profile now, right? Now, on the volume profile, what I want you to understand is, like I told you, we have areas like we got these value area highs and the value area lows, right? This tells me this is where most of the time, once we get to this high, we have a rejection off of, and as you can see, we rejected off of it plenty of times. And these value area lows, we ended up pushing off of it. We can look at it as support and resistance. Okay. Now, what your job is, okay, if we see this, we want to watch a reaction for these levels. Once we get to these levels, if we touch these levels, right? This is how I trade my strategy. Y'all can probably trade different, but this is just my strategy personally. So as we can see, tying all of this together, we have already been pushing down lower, right? Already been pushing down lower. I didn't even notice this, but we did end up sweeping liquidity, giving us our manipulation up here during New York session. And once we came down, we start printing down with speed. The main thing you want to do once we get to these levels right here, like this value area high or this value area low, if we run through it like this, we start pushing through it, and then we get a pullback. What we want to look for is if we're going to continuously hold bullish price action at this area. You get what I'm saying? Are we still staying strong? Are buyers still in? If not, and they keep on running down like this, we want to wait for a pullback here, try to catch sales right here, see if sellers are still in, and catch sales down to the downside like that. You get what I'm saying? That's one entry. The entry I got was the other sell entry where we run through it like this. We ran through it. We caught a pullback to this value area low because we still had previous rest and liquidity, and we got in for the sales right here, right? And we can see it right here. We ended up tapping this low right here. Oh, snap. Here's the low right here. We ended up tapping the low. We actually came back and tapped it twice. We got in for sales right here with a pretty decent stop. Ended up letting it run down to previous day low. That makes sense.
Yeah.
Okay, that make a little bit, not explaining it makes a little bit more sense. And it's the same thing for buys right here, right? So right here, for example, we started back pushing back up. Where did we get accepted into? This value area low. Once we start seeing the chop, you could have entered in for buys around here, and I would have went for a cool 50 points right here as well. And you could see right here, we would have ended up hitting it. You get what I'm saying? So we could have
Mm.
put our buys in right here. Once we got accepted, probably bought in right here. Put stops right here below that low. Yep. And 50 points. I think we'd have hit 50 points right on the dot. Something like that. That's cool. That's 100 points, I think. Yeah, that's 100 and some points. Why did it say 50? I mean, it is what it is. Yeah, there's 50 points right here. Oh, I'm tweaking. Never mind. That ain't 100 and some points. Previous they had would have worked. Boom, and that's your trade right there. You feel me? With a stop of only 11 points, you could have had a full 15-point stop loss, and you would have been chilling. This would have ran to your TP. That makes sense.
Yeah. It
So
doesn't look that complicated.
yeah, it's not complicated. It's one of the easiest trading strategies out there. I've been telling people this. I've been saying my strategy is one of the easiest strategies out here. You get what I'm saying? Because
Not for
all you're doing is figuring out the trend, right? You want to understand the trend, and you
Uh-huh.
waiting for a reaction. Once it gets to your levels, you feel me? Okay,
Yeah.
do we hold these levels out? And of course, you want to make it make sense, right? So right here, for example, with the buys, right here we got a 3 minute fair value gap. More than likely, we have a higher time frame fair value gap right here as well. Yeah, we got a 5 minute fair value gap right here as well. We ended up holding this 5 minute fair value gap, and we started printing back up. You get what I'm saying? You could have entered in down here if you wanted to, or you could have waited. Once we got back up here, which was this value area high or low, and we got accepted. We waited for us to get accepted back into it. We got accepted. We caught the buys up to the upside, right? For sales, once we got back up to this value area low right here, what did we ended up doing? Started to get choppy, and then we started printing down sales right here, right? Sales started to come in. Boom. Once we got the sales, we waited for a pullback to the value area low right here. We got that pullback, and we entered in on the 3 minute time frame, holding all the way down to previous day low. That simple. That simple,
Not,
bro.
okay. I like that.
Yeah, it's that simple. Like I said, I don't want to go over it too deep on here because this is the private. I mean, this it's not the private. This is the YouTube, everything free on there. But what I will tell you though, gang, you got all the free access to, well, not free because you pay for it, but you got access to the A1 traders. I'll look at Flow XICT. I'll look at my strategy because this video explained my new strat. Uh, I look at that. What I do is I'll watch AMD Power 3 first. This is what I'll watch. Then I'll
Yeah, let me
go.
get my Discord.
You said
Let me
what?
see. Let me check my Discord to
Bet,
see if
bet,
I
bet.
have that.
Yeah, what I do is I go through AMD Power 3, then I go to my strategy, and if you want to, the Flow XICT, this got some good things if you're trying to look into order flow. If you're trying to look into order flow, then I'll watch that. But mainly what I do is look at the last 3 videos I post. Them last 3 videos I post, anybody can use them. You know what I'm saying? And yeah, I'm finna after we get out of here, I'm gonna edit the thumbnail and I'm gonna post this vid, and then I'm gonna record some more YouTube vids.
Bet.
But yeah, bro, you got any more questions, or shoot, if not, I'm gonna let you do your homework and get into it, brother.
Yeah. Is it where you could text me the indicator, the volume one? What's it called?
Oh yeah, I got you. I'll text you
Yeah.
right now. I don't want to leak your number. It ain't saved on my laptop. So,
Alright.
baby, I'm gonna text you that. Let me go ahead and send it to you right now while we do that. But yeah, man, if that's all, bro, you too, y'all boys. If y'all want to learn from me personally, it's in the description. If not, y'all can just watch these videos for free. Maybe somebody asks y'all a question. But yeah, man, God loves y'all boys. Catch y'all another video. Peace out.